Hey everyone, what's up? Today we're diving into a topic that can be life-changing, especially for young professionals investing early. Now, I know what you might be thinking. Investing? Isn't that for people with tons of money? Not at all. In fact, starting early is one of the smartest financial moves you can make, no matter how much you have. We're going to break down 5 compelling reasons why you should consider investing early. Trust me, the power of compound interest and the peace of mind that comes with financial security are things you don't want to miss out on. So let's jump right in. Let's talk about compound interest. It's the closest thing to magic you'll find in finance. It's a powerful concept that can transform your financial future if you understand and utilize it correctly. Imagine a snowball rolling down a hill. At first, it starts small, but as it continues to roll, it picks up more snow, growing larger and larger. This is a perfect analogy for compound interest. Just like the snowball, your money can grow exponentially over time. That's compound interest in action. It's the process where the interest you earn on your initial investment starts to earn interest itself, creating a snowball effect of growth. When you invest early, your money starts working for you immediately. The earlier you start, the more time your money has to grow. It earns interest, and then that interest earns interest, and so on. This cycle continues, and over time, the growth can be substantial. It's like a chain reaction of growth. Each step builds on the previous one, creating a powerful compounding effect. The earlier you start, the more time your money has to snowball. Time is a crucial factor in the equation of compound interest. Think of it this way. Let's say you invest $1,000 today and it earns a 7% annual return. This might not seem like much at first, but over time the results can be astonishing. In just 10 years, you'd have almost $2,000 without lifting a finger. This is the magic of compound interest at work. That's the power of compound interest. It's a simple yet incredibly effective way to grow your wealth over time. Now imagine you wait another 10 years to invest that same $1,000. The delay can have a significant impact on your returns. Even with the same return, you'd have significantly less because you missed out on a decade of compounding. The lost time means lost potential growth. The bottom line is, time is your greatest asset when it comes to investing. The sooner you start, the more you can take advantage of compound interest. The earlier you start, the more you benefit from this incredible force of compound growth. It's never too early to begin investing and harness the power of compound interest for your financial future. So, take action today. Start small if you need to, but start now. Your future self will thank you for the wise decisions you make today. Remember, the key to successful investing is patience and consistency. Let compound interest work its magic over time, and you'll be amazed at the results. Embrace the magic of compound interest and watch your financial dreams become a reality. The journey of 1,000 miles begins with a single step, and in this case, that step is starting to invest today. Let's face it, the market can be a roller coaster. One moment you're riding high, feeling invincible as your investments soar. The next, you're plummeting, wondering if you'll ever see the light of day again. It's a wild, unpredictable ride that can leave even the most seasoned investors feeling a bit queasy. It has its ups and downs, its peaks and troughs, and it can be hard to predict when the next big swing will come. But that's the nature of the beast. The market is influenced by countless factors, from economic indicators to geopolitical events, and even the latest news headlines. And sometimes it feels like a wild ride. Traders and investors alike are constantly reacting to these changes, trying to make sense of the chaos. It's easy to get caught up in the frenzy, to feel the stress and anxiety that comes with every market fluctuation. But here's the thing. When you invest early and for the long term, you're not trying to time the market perfectly. Instead, you're focusing on a strategy that allows you to weather the storms and come out stronger on the other side. A diversified investment portfolio can help spread the risk and provide a buffer against the market's volatility. Think of it like surfing. Just as a surfer doesn't try to catch every single wave, an investor shouldn't try to capitalize on every market movement. It's about patience, timing, and understanding the rhythm of the market. You're looking for the big ones, the waves that will carry you forward and help you reach your financial goals. These are the investments that have the potential to provide significant returns over time. Investing early gives you a longer time horizon. This extended period allows your investments to grow and compound, increasing your potential for financial success. The earlier you start, the more time you have to take advantage of the market's growth. You have more time to recover from any market downturns. Market corrections and downturns are inevitable, but with a long-term perspective, you can ride out these periods and come out stronger on the other side. But those who stayed invested and continued to ride it out actually came out ahead in the long run. They understood that the market would eventually recover, and they were rewarded for their patience and resilience. Don't sweat the small stuff. The day-to-day fluctuations of the market can be distracting, but they shouldn't dictate your investment strategy. Stay calm, stay focused, and remember why you started investing in the first place. And let time work its magic. With patience, discipline, and a long-term perspective, you can navigate the waves of market volatility and achieve your financial goals. Remember, it's not about timing the market, but time in the market. Listen, we all want our money to grow, right? It's a universal desire to see our hard-earned cash multiply and work for us. But how do we achieve that? What are the best avenues to explore for potentially higher returns? Well, historically, the stock market has offered some of the highest returns compared to other investment options. When we look back over the decades, the stock market has consistently outperformed other forms of investments like bonds and savings accounts. Over the long term, the stock market has averaged returns of around 10%. This means that if you had invested in a diversified portfolio of stocks and held onto them for several decades, you could have seen your investment grow significantly. Now, I'm not saying you're guaranteed to get those returns every year. Remember, the market fluctuates. There will be years when the market performs exceptionally well, and there will be years when it doesn't. The key is to stay invested and not panic during downturns. But the point is, by investing early, you're giving yourself the opportunity to potentially earn higher returns over time. The earlier you start, the more time your money has to grow through the power of compounding, and those returns can make a huge difference in your overall wealth. Imagine the impact of consistently earning higher returns over a long period. It can be the difference between a comfortable retirement and one where you have to worry about finances. Of course, it's important to remember that past performance is not indicative of future results. The stock market can be unpredictable, and there are always risks involved. It's crucial to do your research and consider your risk tolerance before making any investment decisions. Investing is a journey, not a sprint. And like any journey, there's a learning curve. The earlier you start, the more time you have to learn and refine your strategies. Think of it like learning to ride a bike. You'll make mistakes, but those are valuable learning experiences. Over time, you'll become a more confident and knowledgeable investor. Let's be real. Financial stress is the worst. It can keep you up at night and affect your relationships. Investing early can provide a sense of financial security and peace of mind. When you know you're investing consistently, it takes a huge weight off your shoulders. So there you have it, 5 powerful reasons why you should seriously consider investing early. Remember, time is your greatest asset in the world. The sooner you start, the more you benefit from the magic of compound interest. If you found this video helpful, hit that like button and subscribe to the channel for more financial tips and advice. And don't forget to hit that notification bell so you don't miss any future uploads.